And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. First off, let's take a look at what's in the news. With the cost of diesel rising by about 200% in the past few weeks, price per litre has jumped from an average of 288 naira per litre in January this year to over 700 naira per litre in some locations. This, according to the Center for Promotion of Private Enterprise, is enough reason to suspend the planned imposition of excise duties on manufacturers. The Chief Executive Officer of the CPPE, Dr. Muda Yusuf, notes that manufacturing contribution to GDP is still less than 10% of the growth recorded in the sector in the fourth quarter of 2021 was a mere 2.28% after a contraction of 2.75% in 2020. And this is directly caused to many sourcing forex from the parallel markets at exorbitant rates. This is coupled with manufacturers who are yet to recover from the shocks of the pandemic and subsequent recession. And Flourish Africa, a non-profit organization, signed off on a $1 billion grant to support and promote entrepreneurial activities of African female-owned businesses annually over a 5-year period through coaching and mentoring programs. Project which begins with a pilot phase in Lagos and Abuja will empower at least 2,500 female entrepreneurs across the continent through funding and structured training. Take a listen.
Flourish Africa's $1 billion funding agreement is another initiative aimed at empowering women to play key roles in business and social transformation. This will cover training from its partners, Elo Consulting, Google and PricewaterhouseCoopers.
Our prayer is that we're scaling up. We do plan to scale up.
The founder of the female empowerment platform and Nigerian billionaire businesswoman, Apostle Folorunsho Alakija, sheds light on this philanthropic initiative.
Flourish Africa has decided to ensure that the funding that is so difficult for women to be able to access is now being made available through a grant that will last for the first 5 years in the amount of ₦1 billion, which each individual out of the 500 women that we pick out per year will be able to access to the tune of 2 million naira each. This is to help them in their businesses.
Representatives of the partner organizations highlight some of the processes involved in the training of female entrepreneurs eligible for the funding.
Our goal at Google is really to help these entrepreneurs bridge this digital divide, help them to use digital to really turbocharge their businesses.
Apostle Alakija speaks further on the deal between Flourish Africa and its partners.
We signed with Elo Consulting to provide training in every aspect of business and enterprise to make them better business women.
It's meant to be a 3-month online training. Everything is going to be done online. At the end of each module of the program, they would also be giving quizzes so that we can ensure that learning has been embedded. At the end of the 3 months training, there's also a plan to take them through a 1-year business plan advisory. That way, we're sure that their businesses are actually ready, or that the women are actually ready and well equipped with the skills they need.
With the takeoff of this female entrepreneurship funding initiative, Flourish Africa believes more women across Africa will get to achieve their full potential.
And now we head on to our first conversation for this morning. Nigeria's Federal Competition Consumer Protection Commission, in collaboration with the Independent Corrupt Practices and Other Related Offences Commission, National Information Technology Development Agency, and the Nigerian Police Force raided some illegal financial institutions operating in Lagos, Nigeria last week. The raid was in reaction to consumers' complaints about the financial firms' malpractices. Let's talk to Inaya Wadi, now competition and consumer protection lawyer, member of the UK Centre for Competition policy, joining us on Business Morning. Great to have you.
Hi, Laddie. Nice to
Yeah,
have you
so,
as well.
yeah, so quite an interesting turn of events, with some of these loan companies. But for you, are they really infringing on the rights of users of their service?
First of all, I will start by giving a background of what loan sharks are. Loan sharks are usually money lenders who charge higher than normal interest rate, and they usually operate illegally and they are not licensed. So these sort of companies, they target vulnerable persons, those who are low-income earners and those who are in financial hardship. And most times, these categories of persons they're not well enlightened financial-wise. So if you are taking a loan from loan shark, you are certainly going to get a loan on bad terms and pay huge interest. You'll be harassed, you'll be bullied, and you'll be threatened if you don't pay back. And such threats will make you to it could pressure you to borrow more and more. But needless to say that through the operations of these companies, providing short-term loans, they contribute to general economic activities, which is not negligible. But however, to the extent that these companies use the data of their consumers in a way which is contrary to the law, that's by violating the privacy and adopting tactics like threats and defamations, then there is a probable cause to believe that the user's rights are being violated.
When you're signing up on these apps, they normally tell you that you're going to be having to let them into your contact list, and you check a lot of all those boxes, even at that.
Yes. Well, while we acknowledge the risks that are taken by these companies, it is a basic principle and common knowledge globally that the first thing every entrepreneur should do before you set up a business is to understand the regulatory landscape and the architecture. That's to understand the laws which regulates the business in a particular area, and also to know which licenses do you need to obtain before you operate. So there is no greater risk than operating a business without a license, and also in breaching the law by engaging in unfair trade deals, given that the consumers accepted this.
Even when the consumers accept the terms.
Yeah, given that these consumers accept these terms, but there is also the obligation on the company to actually explain the implication of these terms to the consumer, and also ensure that the consumer actually understands what these terms mean. For example, when I first came to the UK, I went to the bank for me to open an account. The staff had to go line by line on the terms to explain it to me and make sure that I understood it before I signed. So even if I agree to a term which is not legal in law, such a term is actually voidable in law. So and also to the extent that these companies operate without license and they are not regulated, it makes the loan to be an illegal loan which is not enforceable in law. Maybe this could be why these companies are not going through the legal means to recover their loans. Rather, they employ threats, they employ, information and other tactics which are not legal in law. And also, Ladi, under the new Mafia Act,
Right.
there is a penalty for operating a financial institution without a license, which is that a company is liable to a fine that is not less than 10 million and must be double the amount it has collected from the borrowers.
Right. But
So,
how else can these companies actually, get their monies back? They don't get any collateral, giving out these loans. It's quite risky for these companies.
well, this sort of companies, for them to get their money back, they are operating at a risk because if they were licensed and they were operating under the law, then they have a legal recourse with the courts. But if they are unlicensed, they're actually operating on a risk, and that is the risk that they will have to bear.
Right. What about, customers that want to seek, a redress, over, alleged defamation and blackmail? What are the options here?
Okay, for the consumers who want to seek redress, Section 146 of the FCCPA Act, that's the Federal Competition and Consumer Protection Act, it provides an aggrieved customer the following options. The first option is to refer the matter with the lending company and trying to resolve it with the company. Then when that is not resolved, then it can approach the sector regulator. That's the regulator who regulates that particular sector. Like we have a recent case where NITDA fined one of these loan companies 10 million for breach of the rights of the consumer. But where the sector regulator does not resolve this complaint, then the consumer could file a complaint with the FCCPC, that's the Federal Competition and Consumer Protection Commission, which has the power to investigate this case, or it could make, if it finds the probable cause of action has occurred, then it could make an order. But where it finds that there are really no issues, then it will not refer the matter any further. It will close the case. However, this 3 steps does not preclude a customer from approaching a court of law in seeking redress or seeking for compensation for the alleged breach of rights, maybe for defamation, for cyberbullying, for threats. So there are legal procedures for a customer to seek redress, either from the regulator or at the court of law.
Okay. Oh, okay. All right. So, I'd like you to hold your thoughts for now. I'm going to come back to you. I'm going to cross over quickly to Abuja to see what's happening with the peaceful protest at the National Assembly gates in Abuja, right there, over the rejection of some bills seeking gender equality in the country. And after rejecting about 5 bills, I hear 3 have been taken into consideration at this point. Well, we have Kayla Magua right there. She's been tracking, what's happening. Good morning, Kayla. Great to have you. Hello, Kayla. All right, Kayla. So have the lawmakers, good morning. Have the lawmakers been coming to speak to the women?
Yes, hello, Laddie, can you hear me?
Yes, I can hear you. Did you hear my question?
Not today, not today. In fact, by the time we got here at about 8:30 a.m. Yes, I did. We got here at about 8:30 a.m. and we saw that the gates were actually open. Cars were moving in and out of the gates. So we're wondering if the protest was going to happen. Remember, they've been on recess, really. They stopped the protest on Thursday. We didn't have any protest on Friday, of course, because the lawmakers don't sit on Fridays. And this Monday, they didn't sit as well. So Friday till Monday, the protesters had been on a break. But at the time when they arrived, around 9 a.m., we saw the women started cordoning off this whole area, and then they started with their light exercise, and they're trying to get themselves together so they can start their march. So the protest is on, and this is day 8 of the protest, but so far no lawmaker has come to speak to them today, at least. Last week we saw a lot of lawmakers coming to make it clear that, in our case, we actually didn't vote against you, or we are standing with you. So we had a few lawmakers do that last week, but none for today yet. The women are still here, and we're looking out to see who's going to come and speak to them today. We've had people from the EU, we've had people from the UN come speak to these women, but we'll be watching to see who comes to talk to them today. And we do have a few areas where we'd like to ask them questions, because last week when they went off on Thursday, they said they were going to start mobilizing at the local levels. So they said they were going to picket the campaign offices of the lawmakers who voted against the women bills. And I wanted to find out from the women today if that has started, and also to find out from them if this Ekiti election, because we did hear that there are about 2 women who are vying for governorship position in Ekiti State. This move that the women said they were going to start last week, where they were going to vote women during the elections, is the Ekiti election going to be the litmus test of that? Just to find out a few of those things, but we'll be getting to that shortly. Right now, the women are getting ready for their march, Laddie.
Are you hearing anything about the remaining 2 bills?
Nothing at all. Nothing has been said. I think maybe that's the reason why the protest keeps coming up. And sometimes it feels like it's a repetition of what they're doing every day. But it's because nothing has been said to the women at all. All they know, where the information to the protesters ended, was where they said the House of Representatives was going to take a look at, revisit 3 of those 5 bills. Nothing has been said about the other 2, and nothing has been said from the Senate on whether they're going to be doing the same thing. So it's basically, they're watching to see how the lawmakers, respond to these threats that they're making, because they're saying, look, we're going to keep pushing, we're going to keep, threatening them in one way or the other. We're going to go and mobilize at their wards, get the women in their localities, because according to these protesters, the major people who vote during elections are women. So they're thinking, we're going to see if we can, get the women at the ward level to actually, start to, vote against these particular lawmakers. The threat is that they will not allow these people back. So I want to see how much mobilization has been done in that regard. But as for the remaining 2 bills, nothing has been said from the House of Representatives, and nothing has been said at all on any of the bills from the Senate.
All right, thank you so much, Kayla. We'll come back to you later on for more updates. That was Kayla Megwa right there, Channel TV correspondent right there in Abuja, covering the peaceful protests happening at the National Assembly gate. All right, now let's get back to our conversation. We still have Eyinaya Uwadi right there, member UK Centre for Competition Policy. Eyinaya, great, thank you for staying on. So we're still talking about consumer protection, right here in Nigeria. So tell me, what's the role, of regulators when it comes to, these kind of companies?
Yeah. For the regulator is a very, very key. Is a very, very key component of consumer protection, because without the regulator, the consumer will be left at his or her own peril. But ordinarily, markets are expected to function on their own. However, where the market fails to operate accordingly, then regulatory intervention is necessary to correct the situation. The current challenge we're having in consumer protection landscape with the interventions of regulators like the NIDA and the FCCPC, and also the police, their role is to crack down on these illegal lenders, those who are operating without licenses, and also ensure that anyone who wants to engage in these businesses have license. Because if we can recall that these loan sharks gained more prominence in 2020 during the lockdown, when people really needed short-term loans and all that. But the attempts were very, very unreasonable, and consumers complained about their high rates and how they go about threatening them and all that. So basically, consumers need to be protected. That is the role of the regulator. And the unlicensed lenders, they should be investigated and prosecuted diligently to set example and for deterrence purposes. And also the current enforcement by the Federal Competition and Consumer Protection Commission shows that the owners of these companies are not Nigerians, because from the recent conversation that Channel TV had with Mr. Drukera, he mentioned something like that. So if the owners of these companies are not Nigerians, how come non-Nigerians are processing the data of Nigerians? Non-Nigerians are hosting the data of Nigerians. Non-Nigerians are actually operating illegally in Nigeria. And if they can go to the extent of declaring a defaulter dead, who knows what next they may do, and who knows what they are doing with our data.
Quite incredible. All right, Eyinaya Uwadi, member UK Centre for Competition Policy. Thank you so much for coming on the program. I hope these loan sharks don't resurface after all of this. Thank you so much. All right, so after the break, we head on to for the commodities market update. That is next. Do stay with us. This is Business Morning. All right, now for commodities market update, we see Brent futures drop $4.20 to $102.70 a barrel in early trade after falling about 5% the previous day. U.S. West Texas Intermediate crude fell below the $100 mark for the first time since March 1st, dropping $4.30 to $98.71 a barrel, which followed a 5.8% tumble in the previous day. All right, now we have Dumebi, aka analyst at Financial Derivatives Company. Great to have you, Dumebi.
Thank you so much. Good morning.
So it's trending downward now. Is it just geopolitical tensions easing at this point, or is there something else?
Well, there are actually a couple of factors contributing to the decline in oil price, the current decline in oil price, of which, like you rightly said, number one is the fact that Russia and Ukraine, there are talks of possible talks, on
possible talks.
yes, of possible talks and
Right.
negotiations with both countries, and the markets are really considering, the implication of that, and because if this happens, it simply means that oil prices will continue to trend downwards, maybe not to $60 per barrel, but it will significantly decline, and this would help taper down global inflationary pressures that have, resurfaced and surged over the past few weeks since the tensions escalated. But a couple of other things that have also contributed to the decline in oil prices that are number one, Russia did actually state that it would, maintain its contractual obligations to oil supply despite, everything that has been happening with the tension. So the markets are looking at, okay, this is happening with, the tensions, the war, and Russia is still going to maintain its stance on meeting with its contractual obligations in terms of oil supply and natural gas supply. So that as well is, causing somewhat of a decline in oil prices. Then another thing is the fact that the UAE, the Saudi Arabia, came out to, signal that it would encourage the cartel, that's OPEC, and its allies to increase oil supply this coming period. So if that happens as well, that could, definitely maintain the decline in oil prices. And then there's also the fact that U.S. is easing its sanctions on Venezuelan oil production, and if that happens, supply would increase. The U.S. is also, intensifying its efforts on the Iran nuclear deal. That as well could, prop up prices and prop up supply, and in turn decline prices. So those are the factors currently, triggering this downward trend in oil prices.
And I also see China is also playing a role there. With,
yes.
This surge in COVID-19.
Yes,
That's actually looking at demand from China.
Yes.
It's also affecting what's going on there.
Yes, that's also happening.
Yeah.
China is the largest oil exporter right now, oil importer rather. And if anything affects their demand, it will definitely hit the global economy and the oil markets as well. So from the demand side, that's also happening and, affecting the decline in oil prices.
Right. Well, it seems right now, the market is more like, sentiment traders are running the show at this point.
Exactly. Which is very expected. The oil markets are always whirled by sentiment. If a country says this, if there are positive sentiments towards it, we always see oil prices respond almost before any other commodity would respond. So oil markets, a lot of times are like the first signal for when certain things are happening in the global economy. Even when it comes to a statement on interest rates or a statement on the US dollar or something happening with China or even Japan, we'll definitely see something, we'll definitely see the oil markets respond. And that's exactly what has been going on over the past few weeks. Even from December last year till today, we've seen sentiments really parade the market and, drive oil prices either upward or downward.
Right. And, well, with all of this that's going on, with geopolitical tensions and with demand issues, what's your outlook for the price of oil going forward?
For now, definitely the decline could continue, especially with the fact that right now the supply inducing factors considerably outweigh the demand factors, and this could keep prices, trending downward. But we don't see oil prices crashing to $60 per barrel or even $70 in the near term, and that's because there are certain risks associated with the tensions. If the negotiations don't go as planned, we could see, we could see a resurgence in oil prices, and that could increase if demand from from China declines, because when there's a decline in demand, it softens prices. But if China is able to contain the resurgence in COVID cases, this is positive for oil prices. And just perhaps if OPEC doesn't agree to the supposed increase in oil supply, or probably just ramps up supply by maybe an additional 100,000 barrels, just putting it at 500,000 barrels per day, it would just have a mute impact on oil prices, and that could keep oil prices high.
And all of this is impacting, price of diesel. We've seen,
of course,
price of diesel skyrocket, and we also have, poor power supply at this point.
Yes.
And I'm wondering how business is managing with all of
Basically, it's a double whammy for both households and businesses. Right. When we look at the price of diesel, unlike the price of PMS, the market for diesel is deregulated, meaning that the forces of demand and supply considerably, would reflect in the price of the commodity. The commodity is completely cost reflective. So, and the trend is a direct trend. When global oil prices are high, we see diesel prices increase. When global prices are low, we should see a considerable decline in diesel prices. It might not be by the same magnitude, but we should see the trend follow suit. So, and that's exactly what's happening with diesel right now. And we're not only looking at the fact that global oil prices are high, we're also looking at the impact of the exchange rate on the imports of diesel, because Nigeria is a net importer of almost all refined petroleum products. For the consumers or for the household, this coupled with the fact that for households that really don't run on diesel, most households use PMS, right. But the issue is that that's also scarce, and it's going for about like 200 naira per liter. In some filling stations in other parts of the country, you could even find it about 250, even 400 naira per liter. So basically, the cost of living is very high, and the other alternative is power supply, and we're seeing that in a very, very epileptic way. Right. It's not exactly encouraging. So you find that people on a normal day that will probably cook in bulk are not cooking in bulk. Everybody just, let's just eat what we can right now, rather than cook in bulk and, have everything go bad because power supply is not stable. This also is affecting productivity when we look at the fact that right now a lot of companies have encouraged work from home. So people that are supposedly supposed to be working from home, that can't have access to fuel, that can't have access to diesel, and also can't have access to power supply, their output levels are very, are falling, and this is, affecting productivity and labor productivity. Then when we look at... I also
saw that bakers are actually threatening to shut down.
Of course, because, so that's now, we're looking at this now in the business aspect. For businesses, they are not only hit by this increase in diesel prices because their operations are high, but they're also hit by the fact that other costs of input materials are also high. So if you look at bakers, for example, that, they run on diesel, and they also, get some of their products and those trucks that bring those products to them run on diesel. So their logistics costs are higher, their operating costs are higher, running costs are higher. Some of them have already, increased price, and because the commodities that they produce are somewhat price inelastic, so they can't really change prices, really quickly. And a lot of times, these products are also not. When we look at products like confectionaries, meat pie, chicken pie, sausages, cake, people don't demand for those things on a daily basis, unlike bread. So what we're seeing is they are diverting their attention from those ones to the production of bread, and even the production of bread, we're seeing that they're having to miniaturize. So what we're seeing is that they're reducing the quantity of the bread. So the bread still looks okay, but it's not just as much as what it would have been, and that's because they have to cut costs. Right. Not only that, you also have the fact that they are also laying off staff. So that's also having an impact on the labor market and unemployment level. So it's just a loop that's just going to keep going on, because these companies, their cost of operations have increased, and they have to find a way to stay afloat. If not, we're looking at them possibly divesting to other African countries. And even though these other countries are affected by inflation, the business environment, or affected by the global tensions, the business environment is a lot easier for them to thrive than here in Nigeria.
And bread is a very important food. But
Exactly.
We're also seeing other commodities trend downward. That's wheat. We're seeing wheat prices also have a pullback. It looks like all these commodities are having some kind of pullback at this point.
Yes.
Yeah, so how are you seeing this wheat?
It's still the same thing. There's still the same impact, with oil, and that's because like I said, there are possible talks, possible talks and negotiations, and as well, we're seeing that supply from the Black Sea region, which includes Russia and Ukraine, supply is coming up from that region as well. Russia and Ukraine together account for about 29% of global wheat supply. Ukraine alone supplies almost 50% of European food supplies. And we'll also look at wheat, corn, and some other commodities. So basically, that's one of the reasons why wheat prices are reducing. But the outlook, to be very honest, is that wheat prices could still remain very high. Wheat prices are about £1,000 plus, $1,000 plus for per metric ton, and this is the highest in almost 14 years. So even if prices are going to subside, it might still be around 800, 900 for the meantime, which, yes, and is still elevated for countries to import. Now, when we look at the impact of this for Nigeria, that spends about like $2 billion on wheat imports annually, obviously that's going to have a ripple effect on the price of flour and other staples that make use of wheat as an input material. And remember that people just don't use wheat flour alone. You also have the fact that they make use of sugar as well. They make use of eggs. They make use of milk, all of which the prices are already high. And the fact is that the country still imports a sizable number of these commodities. So even if the prices, coupled with the fact that the prices in the global market are high, we also look at the fact that the cost of importing these materials or these commodities are also high because of the fact that the exchange rate is still very volatile.
The year of the squeeze, everything, all prices rising.
Exactly.
Well, now, another commodity, the iron ore.
Yes.
We see that Greece junta shut down the biggest iron ore mine. How's that going to impact the market?
Definitely, it would have an impact for them. That's Guinea now. It would have an impact on their external reserves position, to have an impact on their government revenue, because that's a huge export commodity for them. But when we also look at the attendant impact on Nigeria, this provides an opportunity for Nigeria to play, actively in that market. Obviously, with the issues concerning iron ore production or exploration rather in Nigeria, just like every other commodity, Nigeria might not be able to significantly tap into this market. But the truth is Nigeria has the position to actually benefit from it. There was a recent report that stated that Nigeria could actually make about $60 billion annually from this commodity. And we have, of all the countries in West Africa, Nigeria is part of the top, top 10 producing countries, or countries with the highest iron ore deposits, about 3 million tons. 3 million tons plus. So we're looking at the fact that there's the possibility of this, providing or supporting Nigeria's export earnings. But the truth of the matter is that not until the lingering issues concerning investment in that sector, in regulations, exploration, until those issues are addressed, we can't significantly tap into the market.
So we have issues with the iron ore commodity.
Of course.
Is there one commodity that we actually are doing well with? Just one.
To be very honest, it's quite difficult to say, and that's because several commodities in the country are plagued with almost the same issues, ranging from storage facilities to regulatory issues to production issues. Some for agri-commodities, you have issues surrounding fertilizer. Some of them we have for example, in production of corn, and we import this corn. So there are lots lot of issues, affecting this sector. So it's something that we definitely have to really look into. Not only agri-commodities, but all commodities in the country have the potential to, significantly boost export revenue, and not only boost export revenue, but considerably encourage the divestment plans of the country, or diversifying the country's revenue base. So not until these issues are addressed that we can actually, so really there's no commodity. But the truth is that there are opportunities for domestic investors to actually partake. But the only issue is that, like I had mentioned, there are certain level of regulatory issues, to some of these commodities, and a significant factor is insecurity, because quite a number of both metals, agri-commodities, and all they're situated in the northern belt of the country. So, and with insecurity plaguing those regions, it becomes very difficult to make investment decisions, and not only make those decisions, but also see them through.
Okay, well, what's happening with domestic commodities in Nigeria?
Right now in major markets, we're seeing that prices are actually declining, and a major factor to this is weak demand. So the demand for quite a number of these commodities are reduced, and that's because people don't have the money to buy as much. And this is possibly going to continue, and it, would definitely reflect in the inflation numbers that are probably going to come out today.
Today, yes.
Yes.
Well, you've given your outlook for that number. We'll watch to see how what comes out, for inflation for last month. All right, Dumebi, aka analyst, financial derivatives company. It's always great to have you on the program.
Thank you so much. Thank you.
All right, now, so let's take a look at what's happening in the markets. We have Aniete right there. Hello, Aniete. Well, it opened the week down.
Yes, good morning, Ladi, and happy new week, if I should say so. The markets, profit-taking was the order of the day at the close of Monday's trading session, the start of the week. And of course, just about, you might call it just a bit, 5 billion naira was what was knocked off from the market. So this is how the market turned out at the close of Monday's trading session. 0.02% is how the market closed the all-share index. Of course, when you take a look at the week, last week's trading, we were up by 0.36%. But starting off the week, investors decided to take advantage of the gains that we had last week. So the close of Monday's trading session was down by 0.26%, like I mentioned earlier. Value was down by 5 billion naira. In terms of the sectoral performance, it was a mixed bag there. We had much of the banking sector was up. Industrial goods was down there. We had the likes of MTN Nigeria, the likes of GTCO, Nigerian Breweries, Unilever, and AXA Mansard, pulling the market back by that margin that we saw. And then if you take a look at the volume of transactions was up by 11%. Value was up by 12.66%, while the deals was up by 20.54%. Now, to tell us more about the market as we speak, let's talk to a stockbroker at APT Securities, Mr. Mohammed Jamiu. Thank you for joining us, Mohammed.
Yeah, good morning to everyone.
Yeah. Okay, now we don't seem to see the market having that much of that vibrancy because at the moment as we speak, the month to date, today is the 15th, let's call it the midweek of March. The market is still at 0.1%. Is the market taking a slow down in terms of its performance, and what's the reason for this?
Yeah, thank you. It's a pleasure to be here on the program with you. The market, as it is, responds to what's happening in the macroeconomy. As we have it from March to date, the activity is a bit down, and it's not connected with the fact that we are in any earnings season. So earnings season is the sense that all this to the result, audited report that has been released, and also quarter four that has been released over, they are very encouraging and they are very good results. But investors have actually taken position against that. So the position that has been taken against that before the release of the results has boosted the level of activity in the market in February. So now people are very cautious on what's going to be the likes of audited report for the year. So the traders and the investors are also cautious for now to know what exactly the direction is going to be like. So we are going to see the level of activity to increase towards the end of the market because of the fact that the issue around the quarter one results will start to remain in the market. We will start to come out in the market, and it will solidify whether the company is going to continue on the positive note for the year or not.
Okay, so as of yesterday, we saw the volume of transactions of shares was it went into about more than 1 billion, and this is more than 97% of this is attributed to the shares of FCMB. So can you tell us what's happening to the shares of FCMB, why we had that increase in the volume of transaction on that share, volume and value?
Yes, the activities in the stock of FCMB recently is as a result of strategic acquisition by a major shareholder. Though the information is not yet out to the market to know who actually this strategic investor is like. But actually in the market, what we experience currently is the level of activities in the FCMB, and we have seen the major investor is taking a strategic acquisition in the company. So we are waiting for the result. I mean, we are waiting for the revelation of who this strategic investor is. But pending that, we just believe that it's a strategic acquisition by a strategic investor.
Okay, so Mr. Mohammed, thank you for that analysis of the markets. And as usual, we definitely will continue to, keep our focus on the market's performance. Over to Ladi, time is never your friend.
We'll see how the market performs today. Well, it's just the first day. Yesterday, we'll see how the market plays out this week. Hopefully, the bulls can take some advantage. All right, now, thank you, Anete. Well, we'll take a break now. We'll come back. We head to London. That's in a moment. To stay with us. This is Business Morning. All right, now, let's take a look at what's happening in London with Juliana. Great to have you, Juliana. Good morning. Well, UK's cost of living squeeze is tightened with basic pay falling behind inflation at the fastest rate in over 7 years. How's this being digested over there?
Good morning, Ladi. You're absolutely right. As to be expected, we've received some positive data from the Office for National Statistics with regards to the labour market for February. So 275,000 Brits entered into the labour market. We've been seeing this constantly since lockdown restrictions were lifted across the country. And even though that's all good, the unfortunate part of this data is it shows that pay growth, which is currently at about 3.8% annually, is really lagging behind the annual rate of inflation, which is about 5.5%. And now the Bank of England predicts that could potentially reach 7.25% in the coming weeks. And that's because we know we've got national insurance rises, energy bills are set to rise. And of course, this war between Russia and Ukraine is causing prices to really inflate. So now I think consumers across the UK and workers are starting to feel the effect of rising costs in real terms, as supermarkets are also having to increase their costs. So that's not great. Also, as well, we are seeing that there are record numbers of vacancies here in the UK. I believe there are about 1.3 million in advertising at the moment. This is the highest on record. And to attract viable workers that are multi-skilled, lots of employers are having to offer increased pay. And because they are doing that, this is trickling down on the consumer. So on the one hand, as we've been seeing, it's a common theme now about this time of the month when we discuss labour market, we are seeing that unemployment is falling. I believe it's about 3.9%. But on the flip side of that, workers who are in these jobs are not receiving enough money that would take them to cover all the costs of the goods that they're usually paying because prices are rising so swiftly.
Quite interesting. Cost of living skyrocketing at this point. But we see Boris Johnson is calling for on Western nations to take back control of energy supplies, to end the addiction to Russian oil and gas. What are the reactions to this?
Yeah, this is an interesting op-ed, a piece that Prime Minister Boris Johnson has written in the Daily Telegraph. Before he was Prime Minister and a politician, Boris Johnson was a journalist, and he was employed by the Daily Telegraph. So that's typically where we go, where we want to get a sense of how the government are feeling. But this is a pretty scathing attack that he's written. We're not used to really seeing the Prime Minister weigh in on geopolitical matters as fierce as this, because we've had our own issues. Some would say that on the international scene we've been scarred since we left the European Union. And then, of course, for months and months we were discussing Downing Street scandals when it comes to parties. But he has spoken about the dependence on Russian oil, and he believes that the EU let Putin get away with too many atrocities during the invasion of Crimea in 2014, and it's because the West was so weak on Putin that he's been emboldened to bomb civilians. That's how far it goes. I know we don't have time, but I will read just a small part of what the Prime Minister wrote. He said, "We cannot go on like this. The world cannot be subject to this continuous blackmail. As long as the West is economically dependent on Putin, he will do all he can to exploit the dependence." And so tonight, the Prime Minister will be heading to Saudi Arabia for a meeting with the Crown Prince to try and ask Riyadh to pump more oil, to divert away from the oil that we receive from Russia. But considering that 81 men were beheaded or killed on Saturday, there is lots of criticism about the Prime Minister's trip to Saudi Arabia.
Right, so much to digest there. All right, Juliana, thank you so much. Always great to have you.
Thank you.
All right, now let's take a look at what's happening in other markets. We see Bitcoin started a recovery wave above the 38,200 resistance level, but it spiked above the 38.5 resistance, but faced strong resistance there. We see the market cap there sitting at $1.73 trillion. It's up by 0.06%. We see price of Bitcoin $38,823 this morning. It's up by 0.59%. Volume traded in Bitcoin, $23.89 billion. See, price of Ethereum, $2,551, holding up that 2,500 support level. It's down slightly there by 0.86%. Volume traded $10.94 billion. And we see top alts by market cap. It's mostly negative there. You see BNB, $367. It's down about 0.33%. Cardano, 79 cents, trading down 1.04%. Solana, $80.06, down 0.42%. And we see XRP quite stable. It was 76 cents yesterday, still 76 cents this morning. It's down 0.27%. All right, let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Good morning.
Ladi.
Great to have you, Rume. You sound really excited this morning.
Thank you very much.
All right, so we saw the EU Parliament voted against a ban on a proof of work mechanism for Bitcoin mining. How do you see the vote?
It's kind of hypocritical. Why? Because this would have helped to at least iron certain things straight. Proof of work is very transparent, quite different from proof of stake, which means these are the things that happen before the transaction is validated in the Bitcoin blockchain and as well as Ethereum. So with this, it is difficult to be able to attack the system. There's something called in this industry called 51% attack. So with proof of work, you put all of the computers to work. The one that is more smarter gets the reward. They complain that it has issues with their environment, energy consumption, which I think is overstretched because energy emission for 2021 says that it's only 0.08% of the world's carbon dioxide emission that is actually out there. So they are inflating all of these things to get people scared. And the margin for the vote was somehow worrisome, 23 to 24. It only means that they just lost an opportunity, more like what China actually did on their own time where the mining issue came up. But I think this is also an opportunity for countries that have enough gas to take opportunity of this. I think Nigeria is among to onboard companies that wants to go into mining activities that will earn revenue for that in really, really huge.
Quite interesting. Bitcoin mining has always been a source of concern when it comes to mining Bitcoin, but it's not really impacting the market, is it?
It is this. You mean the parliament
The
stuff?
vote, yes.
Yeah, it is. If you ask me, it's not really impacting on the market. So, but a lot of people have been scared because of what is going on in Ukraine and the economy here and there. So they just look at it like there's no. You have to be at least having some level of peace of mind before you think about investing in something. But I think it's also an opportunity for those that are actually learning to see to get involved in the shortest period of time, so that they get lots of the opportunity. But per se, the technology involved in all of this is very, very important and has huge opportunity. More or less like saying that we are moving from the traditional system of banking and finance to a more digital era. After this war, I think we're going to see a lot of things really change in terms of how we transact, how we send money here and there. But there have to be policies. That is why the U.S. is at the forefront in doing all of this. You can see that the Joe Biden executive order came up the other day talking about a few things that should be done. It only suggests that the U.S. is positioning itself again, like in the 90s when they did for the internet era, where they actually did very well, and a lot of companies around all of those, their economy positioned themselves and got the opportunity. I think Africa needs to think of things like this and position themselves also, and Nigeria leading the way.
All right. Well, Fed meeting tomorrow. We'll see how the market reacts. Thank you so much, Rumi. Always good to talk to you. Okay, now let's look at the top 5 gainers. We see eCash there, topping that count is up about 10.43%. Rune up 9.75%. It's quite a lean top gainers list we're having this morning, but not bad. We see eCash there looking quite good this morning, up 10%. And the top losers there, we see Anchor Protocol there down about 9.07%. All right, that's it for the market. And that's a wrap on the program today. Thank you so much for watching. Do remember, we at Channel Television do not sell or trade securities or Bitcoin. So do not try to buy Bitcoin from anybody behaving or trying to be pretending to be Channel Television out there. Thank you so much for watching. Always great to talk to you and have you watch us. Do remember to join us at Business Incorporated at 1:30 for more updates and developments in the world of business. I'm Ladi Williams. Thank you for watching. Bye.